All right, everyone, let this thing settle in. All right, Mark here. Thank you for joining me for another Bitcoin video analysis session. We're going to take a look here at Bitcoin. I'm going to give you my perspective on this recent rally. We're going to talk a little bit about that and just some ideas as to how to prepare for a potential pullback and possible swing trade opportunity. Now, if you're new to the stream, welcome. Again, my name is Mark P. Markets, and if you don't know how this works, let me just explain really quickly. So first, I'm going to review the economic calendar, something you should do each Monday. Then I'm going to go into my analysis, and then I'm going to ask you, I'm going to answer your questions about charts. So if you have an altcoin or a stock that you would like to see, please share it in the channel now, okay? So when I get to the Q&A portion, I can answer your questions. Okay, so let me just make sure here I'm streaming in the right places, and let's get this thing started. All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Also, just as a fun fact, if you'd like to share what city or what country you're from, please do. It's always interesting to see. Okay, I'm streaming from the greater New York City area, also known as New Jersey, and the weather stinks here, okay, as usual. Anyway, also, if you're watching me on TradingView, sometimes the the browser needs to be refreshed. So if you can't see me and you can only hear me, please refresh your browser, okay? All right, so let's get this thing started. First things first, I'm going to make this chart bigger, so don't worry. But first things first, let's talk about the economic calendar. Now, I reviewed it earlier. There's an economic calendar on the TradingView platform. You should use that. You can use any one. It doesn't matter. Now, this week, there is really nothing major, okay? You have on Wednesday, there's the Bank of Canada has their rate announcement. So if you're in a CAD Forex pair, you should probably be aware of that, but it's usually not a big market mover. So there's that. And then on Thursday, I believe, which is what, the 26th, on Thursday, we have US durable goods, I believe that was on the calendar there. And that's not a big number, okay? Durable goods is not really a big deal. So, you know, it could move the S&P somewhat if there are any surprises. But I would judge this economic calendar as pretty much a quiet week, okay? There's nothing major. Now, in situations like this, sometimes you look at the calendar, wow, there's nothing going on here. Make sure to check the quarterly reports calendar, okay? Because we are now in basically the report season, right? And all these companies are going to start reporting their profits or losses or whatever, right? This is important, even if you don't trade stocks. And the reason is if a major company comes out with a negative surprise or a positive surprise, it can have a significant effect on the S&P or NASDAQ, which in turn can have a significant effect on Bitcoin, okay? So you say, oh, but I trade Bitcoin, I don't care about stocks. Well, stocks can affect this thing. So, you know, this week, if you check the calendar, Microsoft reports, Tesla reports, I believe Google reports, like these are some big names, okay? There's a lot of big names. So just be aware, okay? You can find that on TradingView as well. There's plenty of information about that. Just be aware, that's all I'm saying, all right? Because if there's a surprise, you know, the market may feel it. All right, so TradingView people, by the way, if you can hear me over there, I see anyone watching? Okay. Just now would be a good time to start sharing your questions in the chat so I can get to them once I get to the Q&A portion. All right, so let's talk about Bitcoin now, shall we? And let me make this chart bigger because that's definitely too small. Here, you know what? I'm going to use this one here. That's better. Okay, so let me just say hi to a few people. All right, we got Stian, good to see you. Levant, all right. Armin, Peter, Joel, good to see you. Joel's been submitting some very good examples of his homework assignments. I just have to mention that. You know, I haven't looked through all of them yet. I will, Joel, and I will give you feedback, but nice job. The guy knows how to follow instructions. That's the key thing to doing those assignments. All right, Raman, good to see you. Jeff, Han, all right. Shell, we got you here. Dave, Eligius, Barak, hey, how are you? Long time no see. Zelta, okay, cool. All right, good to see everyone. All right, so now let's talk about Bitcoin. I wrote my article on TradingView yesterday, okay? And this article had not gotten as many views as my previous one. I don't know. People just don't like me on there. But the point of the article was, first, you have to realize, you know, and there seems to be this I don't know, this people like to harass me about the forecastability of charts, all right? Because people like to believe in lies, people like to believe in dreams and fairy tales. The thing is, there's no way to know. Back when we were here in the fourth week of December, there's no way to know that this is ahead of us, okay? There's no way to know. In fact, if you go back to videos that were produced on the fourth week of December, you go on YouTube and you look at the videos, you'll see titles like Bitcoin's going to zero or Bitcoin's going to 10K and all this bearish stuff. Now, I was also telling people at that time that the structure is still bearish on Bitcoin. We have lower highs, lower lows. That's typically what follows, unless, of course, they don't follow. There's no way to know. Now, at that point, 14K was still a possibility, okay? 14K area was a possibility, but the market felt otherwise, okay? Now, what can cause something like this? First of all, the whole world was probably short. Again, if you use those fake guru titles as some sort of idea of what the market sentiment is, they were all very bearish, okay? So the whole world was probably short, and then they got squeezed. So if this is a short squeeze, if that is what this is, and short squeezes can be very abrupt, they can be very sharp and very irrational, right? Very emotional. In fact, that's typical of a wave 3. And in my article, I mentioned that this structure right here, okay, this area from basically the November, December low, this area to where we are now, this is a wave structure that has a simple count. We have 1, this is 2, the consolidation is 2. This movement here is typical of wave 3, okay, movements that look like this. And inside of this wave 3, we only have 3 waves here. Inside of this wave 3, we can count 5 waves from here, okay? So if you can count, as I tell my students, if you can count 5 waves in a structure clearly, like you can here, most likely the move doesn't have much left in it. So that tells us a few important things. For one, you don't want to be buying there, okay? Swing trade, you don't want to be buying there. Day trade, that's another story, of course, but swing trades, no. Another thing to look at here is the weekly chart, right? So you go to the weekly chart, and how does this move compare to the weekly? It's interesting and noteworthy. We took out some resistance levels, right? But the bigger picture, this might be, and this is part of my argument, this might be the beginning of a new leg, of a new, maybe a bullish trend leg, possibly. Often when a new leg begins, it's usually very big and dramatic, right? That's pretty much fits the bill. But what's going to really help us figure that out is the next pullback. So buying this here, I mean, look where you are. If you're buying this now, or if you think you're missing out, look where you are. It's pretty much a general resistance area. Bad place to be going long and hoping, okay? So you need to consider that. Now let's go back to the daily chart. And so again, my point is this: as far as forecastability, you cannot see, we can use a chart to pretty much get an idea of what's within reason over the next week or two, possibly, right? That's really the view that a chart can give us. And we're particularly talking about swing trades. Anything longer than that is completely random, because charts do not account for news that we don't know about yet. Okay, there's no way a chart can tell you what the news is going to be a month from now. Just like a year ago, everyone was saying Bitcoin, actually December of 21, everyone was saying Bitcoin was going to 100,000. Okay, no one was saying Bitcoin over the next year will go to 16K. Not one person. Why? I thought charts where you could forecast the future with charts. You should be able to. At least you should have been able to forecast 30K, right? None of that. So you can't look at it that way. Also, back in October, if I came out and said to you, in the next couple of months, FTX is going to go out of business, and you say, how do you got? That's nonsense. FTX is the safest exchange. They're the most legally connected, blah, 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 right? And we got this over here. So my point is, the charts don't tell you about surprises coming. So don't get caught up in that nonsense. Do not hold on to any opinions. If anyone tells you that they know the future, you should be running the other way because they're lying to you. Okay. Now, here's another thing to keep in mind. You need to consider who you accept your information from. It's amazing to me how most of these clowns, they hide behind fake names. There's no accountability. Okay. They change their names and they still come out with garbage and people still believe it because it's appealing to your emotions. You need to get over that because if you can't, you will fail. You have no choice but to fail. And as a professional trader, I need you to fail in order to make money. Okay. So I don't set up my customers or my followers. I don't set you up to fail. I'm trying to open your eyes to objectivity so that you can make your own decision and you can see things for yourself and manage risk that's comfortable for you. That's the key to this. Okay. Understanding what the risk is, knowing what you're comfortable risking and working with that. That is the key. Taking a small loss. And I'm going to talk about a Bitcoin trade here in a moment, but being able to take a small loss and being able to capture a winner that's larger than the loss is how you make money. Okay, whether it's a day trade, whether it's a swing trade. Investing is another story. I'm not exactly talking about investing here, okay, because that's the largest magnitude of risk. Now, so my point is really consider the source, okay? What is their background? Do they have the adequate experience to even suggest this type of stuff to you? Most of the people in this business do not, okay? One of the reasons why you don't see me putting ridiculous titles on my content is because I'm a chartered market technician. And as a chartered market technician, I'm required to follow a code of conduct. Okay, and if I violate the code of conduct, they take my title away. And I spent a lot of money and time getting that title that makes me non-competitive to all of these frauds who come up with these ridiculous titles. So again, please appreciate the source that you consume this information from. It's very important. You get what you pay for. Okay, now, rant aside, let's talk about the Bitcoin strategy that I'm considering here for the next move. First thing I want to mention, I have someone here on TradingView. Oh, people are actually sending me messages there. Let's see. Hey, I really like your analysis on price action. Okay, cool. I appreciate that. Gold, no problem. Hey, Alex from Miami, how are you? Okay, no problem. Dot, no problem. Good to see you. Miami. Now that's a place, okay? If I had a choice, Miami. All right, anyway. So let's talk. I want to talk about two things here with Bitcoin. The first thing I want to talk about is the trade that I recently shared, the trade idea. And second, I want to talk about the setup that I'm looking for next. Now, it was Wednesday or Thursday, I think it was Wednesday, I shared a short trade right here. Now, as all of you know, I do not short Bitcoin, but people want trade ideas, so I shared a short trade idea. Now, in that idea, I warned, okay, you people that have access to it can see the warning. I said, it's at this point, I said it's a highly aggressive trade because of these resistance breaks, basically, and that this thing can go wrong quickly. Now, the stop wasn't really wide. It was 900 points or 950 points, which in terms of Bitcoin, that's not really a wide stop. It was pretty tight. The stop was at 22K, okay? The entry was a limit order at 21,050, 2150. All right. At the time that I put that out, Bitcoin was at 20,850 or something like that. So, or 20,007, whatever. It had to work its way up, tap the trade in, okay, which occurred on this candle here, which became an inside bar. And then the next day, it just blew right through and went to the stop. Now, I warned in that, if you read the signal, I said, watch out. You need to be cognizant of the conflicting signal, and you need to be on top of that. If it goes the wrong way, you need to do something, okay? Adjust. And the adjustment price could have been 21,184. So you had the opportunity, if you knew what you were doing, okay, and you listened to my warning, you had the opportunity to reduce the stop from 950 points to basically what, 125 points, 130 points. That's much better than 950. The stop could have been put there, or the exit there, because this is an inside bar and it took out the high of the inside bar. That's a conflicting signal. Okay. Now you may say, well, I want to give it more room. Okay, no problem. That's why I had that's why I had to stop. The actual official stop was at 22 even. Okay. Now, do you guys get that? a lot of people don't appreciate the loss management, but that's really a key factor. Now, I don't know if anyone was able to pull that off and get out for such a small loss. And I'm guessing a lot of people probably got caught at the 22K, but that 22K stop saved you from this, which 23,363. So this thing went another 1,300 points against you if you stayed in it. All right. So what would you rather have? A 2,300 point loss, or take that kind of pain, or out at 950? I think I know the answer to that. So anyway, that was basically that trade review. That's going to happen. And a mistake that you need to avoid in this situation, because I know a lot of bears are coming out and they're saying, "Oh, Bitcoin, it's overdone or whatever." People are gonna, people are gonna get caught. It's time to short it again. It's too high. You're gonna see that kind of talk. Now, I don't disagree with the bears, all right. But the thing is, you have to acknowledge this movement. Okay, that's a bullish movement. Now, I just mentioned that there are 5 waves in this, so a pullback is more probable. All right. Again, we now have an inside bar, bearish inside bar from yesterday, which is not active yet, right? There's no trade here yet. But if this low is taken out right here, this low, that would signal a new short. Okay, 22,295 would signal a new short, and that's the one that I'm looking for to pull back into this area here where I have this rectangle. Okay. That's the reasonable support area for the wave 4 of this structure. Okay, so we have basically 1, 2, this is 3. We get the wave 4 pullback, which is likely to be 3 legs. All right, corrective moves typically unfold in 3 legs. It could be more complex than that, but at least 3 legs. So if we get that kind of formation and it goes into this area, that would call for a swing trade long. Now, what I just described may take a couple of weeks to develop, may take a week or two. It's not going to just pull back and give me that setup just because I want it to. It's going to take some time. So that's the bullish strategy. That's what I will be looking for. And if I see it in this area, okay, in this area that I pointed out here, I will be sharing a bullish swing trade long, looking for follow through of wave 5, which can take it back up to here, right? Because higher lows often lead to higher highs. So you're looking at like maybe 24, 25,000, possibly. Now we're talking about a month out, okay? Possibly. So this is not a concrete, this is what's going to happen, but that's the area that I will be targeting if I get my buy signal in this area. Does that make sense to you guys? So that's the bullish strategy, all right? And it's going to take some time to set up. The bearish strategy is going to be the aggressive short off of this inside bar, looking for that pullback. Just realize you're going against the momentum, and it can get squeezed very quickly. These type of irrational movements can persist, right? And then at some point they fizzle out, but it's very risky. You're going against the momentum. Now, this is a game of taking chances, right? We're here to take chances. So you have to decide if that's a chance you want to take. And if it is, look, these things are you're going to have, it's safe to say that half of your trades are going to be wrong. Okay, because this is random. This is a random game. So it's very safe to say that 50% of your trades will be wrong. The key is, when you're wrong, to minimize that loss. Okay, so if you want to take that short trade, I may call it, I may mention it again, and I'll give all the warnings about what can go wrong here. And, if you want to take that and you get the counter signal, you get the conflicting signal, it's up to you to get out. I can't babysit those, especially since I'm not shorting it. All right, so that makes sense to you guys? I know I've been talking a lot here about this thing, but I want to make sure that my points are clear, especially since I get a lot of conflict on my TradingView articles, and I see there's a lot of trolls on there. That's why I don't even bother. I don't even read the comments. Okay, and I wish TradingView would clean that up, but they have they're busy, I guess. Okay, anyway, so that's that. Let me know if you guys have any questions. So to sum it up. Again, there's a short signal that's possibly developing here, which can develop over the next day or two. And there's the long signal, which may develop over the next week or two. All right, so let's simplify it to that. And that's what I'll be looking for. Otherwise, don't have any opinions, because they can be very costly. All right, people say, oh, this is the new bull market, blah, blah, blah. And you start buying. And meanwhile, if this is simply a short squeeze, and there's nothing sustainable here, meaning the bond market is not going to improve, and all, then this is probably going to give it all back. okay? And if you're going to buy into this, these aren't the prices, okay, to play that game with. All right, these are not the prices for that. All right, so let's get into your questions, shall we? So let's start here with, well, let's see, on TradingView, I don't have too many questions. You guys on TradingView, if you have a question, now would be a good time. So I'm going to start there. Let me see, I have a question from Nasir, all right? Gold. So gold has been very interesting. You know, gold has been responding to this dollar rally, right? I mean, a lot of this has to do with the dollar. Have you seen the dollar? So here's gold. Let's take a look at the bigger picture here. And gold, if we look at the dollar, whenever you deal with gold, right, you should be looking at the dollar and you should be looking at bonds. All right, so let's just take a quick look at the dollar here and let's see what's going on. Right now, this dollar has been, over the recent month, I mean, this dollar has been pretty lousy, or I should just say bearish, okay, with these lower highs and lower lows. This pullback has been very persistent. It broke this support. I had this support zone labeled on my chart, broke it. It's now acting as a resistance, as you can see, and it's gone lower. Now, the thing is, though, you know, that this has been a persistent bearish movement, but we have to be careful because when we go to the bigger picture, we can still argue, right? I mean, look where it is right now. Look where the dollar is. That is a level, all right? What is that, 101? So the 100 area, you can round that to the whole number, is a relevant level, and it's there, okay? Now, today is Monday, so we don't know how this candle is going to close by the time the week closes, but we have a doji on the previous week, and we have a pin bar developing now. We have the whole week before it closes. The point is, if the dollar mounts a rally here, you know, I wouldn't expect the dollar to go all the way back here. I mean, unless we have the appropriate catalysts. Right now, what's reasonable to expect is just basically just a retracement, okay? And your first resistance is going to be around this area, this old support, which is around the 105 area, okay? That's one area to be targeting a dollar rally. If it can get through that, then you're looking at this area. So those are your dollar levels, right? And the reason why I bring this up is because they will affect gold. So the dollar right now is in a location where a squeeze is more likely, not bearish continuation. There's support levels all over the place here. Okay, you have this one back here, you have this one over here. Like it's very risky. I don't like shorting lows. Okay, and I'm not one of these mindless, you know, oh, follow the RSI, it's a bearish trend, and I'm just going to short it because that's what it says. I don't trade with Captain Obvious, right? And you shouldn't either. So you have to be counter. You have to think counter. If this thing is low, it is likely to bounce. So dollar bounce means pull back on euro, pull back on gold, XAU, right? So let's go to gold. So gold, I mean, look, gold looks amazing, okay? And it looks similar to that Bitcoin situation, right? You notice the similarity? It's all because of the dollar loosening up, the dollar relieving everyone, because strong dollar is bad for everyone, right? Strong dollar puts bearish pressure on everything, and strong dollar is a result of what? Rising rates. Now we're going to talk about interest rates here in a moment, and I see a very good question about that. But anyway, so back to gold. So look where gold is. This is your gold range. Okay, you see that? And this gold range, I've been talking about this thing for years. I remember a couple of years ago, I warned that this thing may go into a range, a wave 4. That's what this is right now, all right? Until it breaks out of that range, it's a gigantic wave 4. Let's take a look at the weekly chart on gold. Is this the week? It is the weekly chart. Okay. So the point is this: you're near the top of the range. You're near resistance levels. What's gold at right now? I mean, it's basically 1930 area, and the range high is just over 2000, right? 22,070, whatever, like that area up there. So this entire zone, from basically where it is now to this area, it's going to be a tough spot for gold. So if you're in gold and you're in from good prices, this is a place to consider locking in some profits. Now, gold, of course, look, there's lots of arguments for gold. And if the dollar breaks and just continues lower and breaks below 100, you can see gold above 2000. It's possible. But my point is this: now is not the time to be buying gold. All right. Oh, gold looks safe now. That's all the gold experts come out now. Gold is going to 5,000. How many times have we heard that? Right. This is not the place to be saying that. If they're going to say that, they should be saying that here. But why don't the experts ever come out there? They never come out there. They always come out up here. So again, if you're in some, take some off the table. But gold, I'm not saying take it all off the table. It just doesn't hurt to lock in something in an area where selling activity is likely to develop. If that dollar bounces, you're going to see a pullback on gold, most likely, and it's going to originate from somewhere in this area. So I hope that gives you perspective on gold. If you want to buy gold, especially longer term, you should be looking at these lower ranges. Any retest of this. Now, keep in mind, there is a seasonality to gold, and by May, June, gold, that's typically when gold, like over these next few months, is usually when demand goes away for gold, but that doesn't affect the chart one-to-one, okay? But if that's the case and gold just starts to get a little weaker, this is the area to be looking to accumulate gold, somewhere around here in this area, okay? And we're not going to see that right away. So just keep that in mind. So the most we can get out of this right now is gold is just too risky for longs at these levels, all right? Especially if you're thinking about like investing or whatever. So I hope that answers your question on gold. Look to lock in profit, not put on more risk, all right? Does that make sense? Okay, let's move on. So I covered gold, I covered the dollar. I saw a question here about, all right, so let me move on to the other chat here. Was it euro? Yeah, okay, so Stian, with the euro, let's take a look. So now euro, gold, dollar, it's all relative. So look at the euro. Does that look very similar to gold? It's a very similar situation, okay? Now, euro has all that stuff with the European Central Bank. I mean, I saw something about they're raising rates or whatever. Of course, they have to copy the US. But so here's the thing with this. That changed this tune real quickly, right? You guys remember, Steven remembers, I had a couple of shorts in that. They got squeezed, and I have not been shorting it since, right? That I tested the 104s, 105s. I was done with it. After it stopped me out 3 times, I'm not going to continue to short something that behaves that way. Now, Steen is pointing out this pin bar, okay? Look at the bearish pin bar. So this could be an aggressive short developing. Now, what does aggressive mean? First of all, it means you're going counter the structure. Our short-term trend on the euro, we can argue, is bullish. Short-term trend, okay? There's higher lows and higher highs. So now we're fighting this thing on the short term. Is that a bad thing to do? No, you just have to understand the limitations. You have to understand the risks that you're facing. So let's look at the bigger picture level, right? So as far as a short, let's see, where is this happening? What levels do we have in this area? Do we have any levels? Any points of reference? I mean, this is a point of reference right here. Look at this, right? This is an old support on the euro. So resistance is likely to assert itself here. Now, we've had a couple of these instances earlier, which have all failed. At some point, this thing is going to pull back a bit, right? We haven't seen a real pullback on the euro for quite some time. So maybe this is the one that pulls back. I don't know, right? We can't see the future. But the thing is, if we get the setup, you have that. You have also, it's a failed high relative to this high over here. That's failed high territory right there, okay? So there are some compelling reasons, at least in terms of location, for an aggressive short. I'm open to it, Stian. I'm open to it. You have like a compound failed high. You have a failed high relative to this high. We have the failed high relative to that bigger picture high. Like there's just a lot of reasons lining up here. So I'd be open to the pin bar, right? We get that pin bar tonight. Perhaps I'll send out a sell signal on this thing. And I short the euro, so I would be open to that. But just keep in mind, do not target like something like this. Like that would be probably unreasonable. I mean, the first target everyone's probably going to be buying around is going to be around here, right? Around, what is that? 106 area, and we're fooling around 108. So a 200 pip range, if you can pull out 150 pips on something like that, that's a good trade. Okay, that's a good swing trade. So, and what kind of risk are we looking at here? Probably not a whole lot. 109.26. 108. So you're looking at about 70 or 80 pips of risk. That's about right for the euro. Okay. So that's not a bad trade idea. I like it. Okay. So we'll see how that closes. Most likely it's going to close like that, and that may turn into a signal. So thanks for pointing that out. That's definitely one worth mentioning. Okay. Levant. Okay. From Turkey. Yep. Okay. Got you on gold. and USD currency index. All right, so I basically went over the dollar, so I got you there. Let's check over TradingView here. What's going on over here on TradingView? You guys behaving yourselves? Let me see. Do I have any trolls saying some bad things over here? Let's take a look. All right, so I see DOT. All right, so let's take a look at DOT. DOT. So now we're getting to the altcoins. Now keep something in mind, right? So a lot of these altcoins they're all getting basically goosed. They're getting stimulated by this Bitcoin situation. Okay, they all follow Bitcoin, right? Bitcoin is like the main index, the parent index. So of course you're going to see things that look like this. Okay, it looks very similar to the Bitcoin situation. Don't be misled. Okay, don't let the chart mislead you. Look at your levels. When you see a movie like this, the first thing you should be looking at is first go to weekly, right? What's going on here in the bigger picture? It looks very similar to Bitcoin. Okay, very similar. So look, it's a blip. We've seen blips like this before, and they don't go anywhere, right? So what makes this one, separate from the other ones? Nothing. It's just it could be part of the short squeeze, right? The short squeeze that basically encompasses everything. All these shorts get caught, right? They're following Bitcoin. So you have a resistance here, an old support, new resistance, which tells us one simple thing: don't buy it here. Okay? If you're going to buy it, like that Bitcoin plan that I outlined earlier, you should be looking for the pullback. Now, let me say something. If you don't have patience as a swing trader, you're in the wrong game, because the whole swing trade idea is waiting for opportunities that offer a better probability, and that takes time. It could take days, it could take weeks. So I'm like, man, that sucks. I don't want to wait that long. Okay, there's a solution to that, and that is you have to then have other strategies in play, like day trade strategies. But if you don't have the experience, then you're only going to lose there too. So it's either you educate yourself and get some experience, because there's no way to make up for the lack of experience. You have to have a lot of experience, because you have to understand, as a day trader, you have to understand what you're up against, and you have to understand how quickly things change. Okay. If you don't like that idea, then really swing trade and investing, those are really your only choices. And the swing trade, you're going to have to wait. Okay, you have to get used to waiting. So, and I get criticized for that, because all these people obviously are incapable of controlling themselves. And if you have that problem, like you suffer from fear of missing out and all that stuff, you're just going to be a profit opportunity for your brokers, for your exchanges, and for professional traders. That is all you are. So if you don't want to be a profit opportunity, learn how to control yourself. Okay, now I know even if I say that, it doesn't matter. A lot of people cannot get over themselves. And that's what makes that's our only source of profit in this game, are people who make mistakes. Okay, and mistakes begin with not being able to control yourself. So my point is this: this is not a place to be buying something like DOT. Okay, you have resistance all over the place here. Wait for the pullback. Now, if you want to get fancy and you want to think you're cool and use like fibs, you can say, okay, look, you can draw like a retracement. Let me draw my retracement here, and you can get yourself some overlapping levels, right? So look at this. What is that? $5, basically 5 3/4 area, right? That gives you a point of reference. Okay, this area right here, which that measurement wasn't even necessary, because look, there's a level there. Okay, coincidence? No, you can use that basically as just a form of confirmation. So that's really the place. If you're interested in it, that's where you should be looking, not here. Is it possible that this thing could develop a higher low somewhere above that? It can, somewhere like that, okay, which puts it in the what? The 5.5 area, something like that, 569. That's all possible, but you have to wait for price to test the area, number one, and you have to wait for price to deliver a setup, okay, where you can measure risk from. At this point, the only thing we can see is you're at resistance levels, and although it looks vertical and I'm going to miss out, don't be misled. People, again, they always focus on what's on behind, which there's some function to that. Of course, we need points of reference, but you have to consider what's likely to happen here. Okay, that is what you have to consider. I remember the days when you had like Solana and you had Cardano and they were pushing high after high after high, and everyone's like, oh, but they're going to keep going. And I kept warning people, don't buy into these things at these highs. Oh, but it's going to keep going. And we see eventually how far they kept going. Don't get sucked into that. Wait for a pullback. It's long. Buy supports. Okay, buy supports. People are going to buy this breakout here. Those are high risk. It may work, but it's not going to work for long. Okay, it's like kind of like this over here, right? They all bought the breakout, think, oh, I'm going to be a billionaire now, and then they get stuck in this. Do you want to get stuck in that? I don't think so. Okay, so please keep that in mind. All right, let me move along. I talk too much. I know. People are like, man, when is he going to stop talking about that? Let's move on. All right, so let's move on. What do I have here? So that was DOT. Okay, could you look at CNR, Canadian Rail? Okay, all right. So CNR, I guess that's a stock, right? Let's see, Canadian National Railways. Okay, so let's take a look at the stock. Can I click on this here? All right. So let's take a look at the, now I'm not familiar with this stock here. First things, let's take a look at the weekly chart. That's the first thing I want to do. And I want to see what's going on. So I can see what you mean. It has like a decent structure relative to what's been going on, you know, like with the S&P and all that stuff. It's definitely stronger, but that's the long term. Okay, look at your short, or let's talk about your midterm, right? Going back about 6 months, right? Something like that. This is not exactly bullish. It's more of a consolidation. Okay, this section, yes, the entire thing is bullish, but this section here is not. So keep that in mind. And this is a weekly chart. Okay, so keep in mind, look where you are. You're near the range high, kind of like that gold situation. You're near the range high. Current candles, you have a weekly pin bar that developed the previous week. You take out the low of that pin bar this week, you have a lower high and a sell signal. Okay, so that's certainly not something I would be excited about buying, especially for a swing trade. So you want to note your lower levels, right? You have a support over here at 149.25. So you figure 149, 150. And then you have a level right around here. See this higher low? You have a level here, which is what? It's around 160. Now here's the thing with that 160. This area, right, is the midpoint of the range, right? This area right here. That's usually not a great area to be buying anything. Okay, it's usually very, very random. So you want some reference point to lows if you're getting involved. Now, I don't know if you're thinking swing trade. I don't know if you're thinking investing. Either way, swing trade or investing, these are not attractive levels at current prices. You want to see some kind of retrace, some kind of a test of support followed by setup. Does that make sense? Okay, so that's CNR. Thank you for asking and bringing up a stock that I'm not very familiar with. Okay, so let's move on here. Good question. So I saw a question here about, all right, let's see. So I covered that. So Peter asks about USA. So the USA debt, interest rates, and bond. Is there any correlation? That's a very good question. I don't know. Okay, I can't give you like a solid answer on that. Maybe it's a good question for ChatGPT. If you're not familiar, look it up. Anyway, but I can say this. Obviously, the more money we borrow, we have to pay interest on it, right? So there may be some type of relationship. The thing is, I don't know how that would apply to swing trades or especially day trades. It would be completely irrelevant to day trades. Okay, so swing trades and investing is where something like that would be most relevant, if anywhere. But a lot of times, don't get caught up with the complexity. Charts can at least give us, signals and places to define our risk. Something like that may be like a fundamental driver. Like for example, the way I use bonds, I'm looking at rate levels of interest rates, and I'm looking at how the market reacts to these things. And I know that if rates continue to rise, right now rates are sort of neutral, right? They've risen over the year, but now they've lowered to a point, and now they seem to be fluctuating, right? They're not continuing to rise. So that relieves bearish pressure. That's the way I have to look at that. Okay, and that's why I think we're seeing it rally in the NASDAQ, rally in the Dow, because the markets are getting comfortable with this new baseline of interest rates. Okay, and they're probably suspecting or pricing in that the Fed is going to be less and less aggressive in the future, not more aggressive to raise rates. That's one thing you have to consider based on recent Fed speak. So that's all opinion and things can change, but just keep that in mind. Okay, if the rates just fluctuate and don't make new lows, that can invite new money into the system, and that can make the Bitcoin move that we see here sustainable. At another point, if we see rates start rising again, okay, or bond prices start pushing lows, then this Bitcoin thing is not going to be able to sustain itself, and neither is the stock market. So keep that in mind. It's a function of interest rates. Okay. So I hope that answers your question. All right, cool. All right, cool. We got Ramin from Iran. Good to see you. Thank you for stopping by. Okay, so I'm just going through. Oh, look, Dave from Dorset, England. Oh dear. Hello, Dave. Okay, that's my bad British accent. I'm sorry. I'm not making fun of you. I just have a bad British accent. All right. Let me see. I know there are varieties of a British accent. I know I've learned that from Jamesy from London. All right, so let's see. Riga, Latvia. Hey, Zalta. Okay. So XU100. Oh, is that the Turkish stock market? Let's take a look. XU. Man, what is going on with my computer today? This thing is just not cooperating. Okay, XU100. So we have here the Turkish stock market, I would imagine, right? Is that what this is? What is this? Here it is. So this is, so I remember seeing this. In fact, I think you asked me about this before, Barak. We were talking about as a function of inflation. We were talking about this thing. I mean, look at this. This is what I'm expecting the dollar to do. Okay, we have this nasty pullback followed by like this kind of rise. Now, here's the thing. Something like this, if this thing cannot make the new high, which it looks like it's failed, it's established a lower high. Now, this is a daily chart. You have an outside candle that's developed today, and I would imagine this market is closed. So you take out this outside candle tomorrow, you're looking at a sell signal and a potential pullback. Okay. Now, pullback does not necessarily equate to trend reversal. It's not necessarily that. This thing may form a range basically between that low and that current high, right? You may get just a consolidation in here, which would be a higher low consolidation if it can't break the support. So keep that in mind. Something like gold, right? This thing may consolidate. If that's the case, if that's what this produces, then you're looking for longs at the range low. Okay, this would be the area here where you'd be considering longs in this area. Somewhere in this zone is where you'd be looking for long setups. Okay, shorting this, that's a possibility if the range can stay intact. But keep in mind, just like Bitcoin, this is very similar to that Bitcoin setup. You may see another test of high. So you're better off working with the bigger picture trend, which is clearly bullish on this thing. Okay, so just keep that in mind to give you some perspective. I hope that works for you. All right, let's move along here. Thank you for asking about that. Watching all the way from South Africa. All right, Armin, yes, good to see you again. Avi, how are you? From Israel. I would appreciate it if you went through the main indices, okay, and the NASDAQ. I am short the NASDAQ and want to know whether to sell or to stay. Okay, good question, Avi. Sorry it took me so long to get to this question. Now, the NASDAQ and S&P, I watch those very carefully usually. Let's start with, you short the NASDAQ, so let's take a look at the NASDAQ first. All right, I mean, and whatever I say about the NASDAQ, a lot of it will apply to the S&P, right? So here's this NASDAQ situation. This is very interesting. You're short the NASDAQ. That's a tough short. Now, as you can see, I have a bunch of levels on this chart. The NASDAQ blew through this. This was an old support. You see this rectangle here? This was an old support, okay, which is now, I'm sorry, it was an old support, broke, became a temporary resistance, and broke. This is not what you want to see, all right, if you're short. Definitely not. Don't want to see that. So this situation right here, you have today's candle, man, that is strong. All right, now we're going into those quarterly reports over this next week, and you're going to have some big NASDAQ heavyweights reporting. If they report good, this thing can do that. So right now at this point, I don't know what to tell you. There's no sell signal here. You have a resistance zone, right? This is all resistance over here, this area. So you have a zone that you're right in the midst of, okay, resistance. Now you have 10 minutes before this thing closes, and this thing is going to close up 245 points. So it's in a resistance, but man, there's no reason to sell. So it's within reason to expect momentum to potentially test these levels, okay? So you may have to sit in this thing to 12,000. If you don't want to take that kind of pain, it may be a good idea to just get out, take the loss, and if a new sell signal develops, you know, reshort it at that point, because it's very hard to get caught. If this thing squeezes, these moves can be very irrational and they can be very painful. If you got short, like on something like this, right, which is a valid short, okay? I had the same situation in Bitcoin, and you get a follow through attempt, right, like that, followed by this type of candle. Like that's not what a bearish market should do, okay? So maybe you say, oh, I'm going to put the stop up here, and then this candle closes like this. That right there should have been like, I need to make an adjustment, either tighten the stop, take the loss earlier, whatever. But you certainly should have a stop in that, because if this thing gets out of hand, if it clears this resistance, you're looking at problems. Let's take a look at a weekly chart, right? Like, where can this thing go on the weekly? If that higher low stays intact on the NASDAQ, and we start to see like again, rates don't seem to be a threat right now, and we have all these quarterly reports coming out. If we get some positive momentum out of that, the NASDAQ can work its way up into this area, all right, which will not be good for you. So keep that in mind. You are fighting a higher low, all right? This bearish trend that we've been watching for the previous year may be changing. I'm not going to say it's fully changed, because it needs to clear the resistance and produce another higher low. Right now, this may be a consolidation, and you're getting to that range high. So you have to decide how you want to manage that risk, okay? So I hope that helps. I'm not one to just change and say, okay, bullish trend. I'm not one to do that, because the market needs to prove. And the market, although it looks compelling, it's too early for me to make that judgment. I wouldn't call it bullish yet, although this is certainly a good start. Okay, it's certainly an argument on that side, just not confirmed. Does that make sense? Okay, and it's very hard to be like, oh, it's going to do this. There is no certainty in this game. So that's why you really need to look at everything in terms of possibilities and what the market is telling us now, okay, and what it should be looking like based on what we were thinking originally, right? So if you were thinking short originally, this move should not be here. Like it's not weak if it's producing this type of move, okay? So the short is losing its argument. Does that make sense? Okay, let's move along here. Good question, Avi. All right, hey, Golden, good to see you. Okay. You often mention if you get a signal for long or short. What do you mean by that? Oh, so a setup, a signal. So there has to be, I have 6 steps that I go through that that my followers know about. And the main part of the steps are you're identifying your trend, you identify a location where there's a probability of a certain type of event happening, and you should be able to predetermine what this behavior is. Okay, now I'm not saying it's some kind of concrete forecast. I'm saying if we have a resistance level, right, like this, we should be able to predetermine that selling activity is likely to develop there. But we can argue that and say that that's reasonable. But the question is, does it appear there? That's what the setup is all about, okay? So if there's no setup, like right now, there's no setup. So even though we're in a location, it's getting there, right, a possible location for a short, there's no reason to short. If there's no setup, you stay out of its way, right? And that helps me save a lot of money. Like the Bitcoin had a similar situation around 18,300, and it was an area. I said, hey, it's a range high. I'm interested in shorting. Never got a setup. Blew right through. Okay, so if I was all opinionated and all thought I was big and bad and that I knew everything, oh yeah, it's a short at 18.3, and it would have went right to my stop. Okay, if I had a stop, but I never called it because there was never a setup, and you stay out of the market's way. Okay, the market knows everything, so the market needs to give you a solid reason. That's what a setup is. A setup allows you to define risk, and a setup allows you to actually, from the setup and the risk definition, you can actually appropriate your profit targets. Okay, that can all be done just from the setup. But you also have to realize and embrace that setups, like everything else, can appear randomly. So it's not like they give me some kind of special advantage, because they don't. Okay, that's very important to understand. As a retail trader, the only way we can manage that risk is really just by being quick on keeping our losses small. That's the only way we can do it, because there's no statistical advantage. Okay, as much as everyone likes to pretend that there is and believe in fairy tales, if you're a retail trader, you don't have a statistical advantage. Okay, if one existed, one that we can count on, then people will be able to grow their accounts no matter how small the account is. You can consistently grow the account without much effort. That's what an advantage provides, a real advantage, right? Most people, especially in retail, there's no such thing. All right, that the advantages that existed many years ago. I started out in this game when there were advantages that were available to the retail trader, and I saw how much money was made as a result. Those advantages are long gone. Okay, so you have to do things a little differently. All right, and if you don't believe me, I'm not just saying you. I'm saying like in general, like, oh, you're just saying that because you're just always in a bad mood. Uh, there used to be this thing called open outcry. Okay, I don't know if you guys are familiar with it, but it was how a pit trader used to trade. At one time, and for a long time, that's how business was conducted. I recently spoke to a guy who used to be a market maker on the Chicago Board of Options Trade, right? The CBO, and he was a floor trader. He's no longer a floor trader. And I asked him why. Why are you no longer a floor trader? No more advantage, he said. I said, well, what was your advantage? Proximity and leverage. Okay, so he was at the closest source to the price, right? You couldn't get any closer than being in the pit, and they had no more advantage. That's why the pits are no longer viable. And there's documentaries about that. Okay, that's why they have no more advantage. So consider that. Okay, and charts don't give us an advantage. All right, now I went offline. Okay. Okay, no problem. Okay, I'm just looking at. Okay, so U.S. 10-year yield. All right, so Nugget. All right, I'll look at the 10-year yield. US 10Y. Now, this is the inverse of the bond futures. I usually look at the bond futures. This is the inverse of that. All right, so this is the yield. This is interest rates on the 10-year bond or 10-year note. Right now, look at this. Interestingly enough, what is that? A double bottom. Okay, but here's what I was saying before. Rates seem to have found this comfort zone. Okay, where rates were higher, they pulled back, and the market seems to be all jumpy and positive and optimistic now, right? And you can see rates have risen a little bit, but this is meaningless. You know why? Because rates were higher not too long ago, right? And now the market's like, oh yeah, look, rates are, so what? This means nothing. We were worse at one point, and the market seems to be pricing in optimism. So the yield has a double bottom in it. Does this double bottom follow through? First, we're going to need to see the dollar rally, right? That'll help this thing along. The dollar has not been able to put that rally together just yet, all right? But as far as this thing is concerned, there is this thing in play, but until we break out of this range, one way or the other, okay? If we break out to the upside, that's going to put bearish pressure on everything. And then we're back in the toilet like we were, 6 months ago, everything's bearish. That's what we're looking at if this thing clears this resistance. If it just fools around in the middle area and really produces no results and it just finds this comfort zone, then we may see an optimistic market, okay? Especially, with all the talk and all the nonsense out there. And if rates are just fooling around, the market may get comfortable and it may bring in money. So that's why don't carry opinions. Let this thing tell you. If this thing turns, okay, and breaks lower, that's only going to be a positive for the market, okay? It's going to reduce the burden even more, the interest rate burden. So please keep that in mind. It's a good question. So you can use this chart or you can use the ZN1, which is the inverse of it, right? ZN1 is the bond futures, okay? It's the inverse. So that's ZN1. This is the chart. As you can see, I have stuff drawn on this chart. This is the chart that I use, okay? I mean, and recently, look, like ZN1 broke out, but it's giving it right back. So, you can keep these on your radar, whether it's US 10 yield or ZN1 or even TLT, which is the ETF. All right, it's bond ETF. So good question. Thank you for asking about that. All right, I'm an investor in CNR. Okay, no problem. Investor. Okay, all right. Thank you for the videos. Can you comment on? All right, that's a lot of symbols. All right, I'll cover one of those from Slovenia. Okay. So I'll go over. You know what? I'll go over LLY. LLY. Let's take a look. So this here, right? This is the daily chart. This is a heavyweight company. Let's go to the weekly, and let's just look at this bigger picture here. So that's generally a strong stock. Okay. drug maker. But this thing has this failed high, like lower high situation, and it's pulling back. Okay, no problem. Look for your support. In a bullish trend, supports are more likely to hold and resistances are more likely to break, right? That's the thought process that we should have. That's the rationale we should be considering. So if that's the case, your support that is likely to hold is around 315. This thing's at 342 right now. So it has a little room to pull back here a little bit more. If you're looking to buy this thing, you might want to wait. Also, check their quarterly reports. I don't know when they report, but you might want to check, because if they come out with a bad report, you're probably going to get closer to that 315 a lot sooner. But as of right now, don't get into this thing too early. You have a minor support here, but there's no signal to buy. There's nothing here. Okay, you have this inside bar. Took out the low of the inside bar. That's a sell signal, if anything, if you really want to scrutinize that. So look for that 315, or even you can even round that to 300, right? Whole number, and look for buy signals in that area or some type of reversal structure. Does that help? So I hope that gives you an idea, but certainly a generally strong stock. What is that second? All right, let me see if I could do the second. APDN. Let me just see that real quick. Is there anything to say about that? Oh man, is that right? Is this correct? I think that's the correct symbol. All right, so something like this. I mean, look, you have you have this consolidation, right? This really long consolidation. It's interesting because you have this initial move from way back. I mean, that's like October. Okay, it consolidated for months, and it may be trying to break out. You have a little higher low, but it's something like this. It's been out of play for so long. How much is this thing? It's like $1.62. Something like this would probably be more appropriate for an investment. Not going to swing trade this. Let's look at the weekly chart. I mean, this thing has been all over the place. Obviously, these spikes are most likely news driven. So basically, you look to accumulate something around these prices, and you're putting your stop somewhere around the low, $1, maybe 50 cents. I mean, what is this thing going to go to zero? It can. I've seen some stocks go to zero. So that's all I could say about that. All right, let's move along here. Okay, so from Lithuania. Okay, cool. All right. Thanks for stopping by, eDuo. Can you give your analysis on the bond market? Okay, got you. Covered that. DeMark, all right. Miserable toppings. Okay, got the bonds. Okay, miserable. I like, it's a funny name. Miserable toppings. Sounds like you're from New Jersey. All right, let me see what else I got here. Alex from Romania. I used to be very famous in Romania. I'm no longer famous there. Okay, Netflix looks impressive. I started selling what I bought a few months ago, but I'm thinking about selling some more. See no reason. NFL, oh man. All right, NFLX. Let's take a look. Yeah, that is impressive. Look at that. That's a strong stock. Let's take a look at the weekly. Let's see, and especially after this thing got beat up the way it got. So at this point, I can agree with you. There's no reason to sell right now. There's no technical reason anyway. So you want to look at your levels, right? You have a level, you're fooling around, you're getting into a resistance here that's around, what is that? 380, something like that. So, sometimes when there's no reason to sell, if you have a nice profit, it doesn't hurt to take something off the table. It never hurts, all right? You have a location, but there's no technical reason. If it clears that location, of course, you're going to need the NASDAQ to agree with you. The NASDAQ has also been very strong, as we looked at earlier. Okay, so if the NASDAQ agrees with you, and I believe they have their quarterly report coming, right? The next area you're looking at is 450. This says 466, but you can round that to 450, something like that, around there. So those are your levels, all right? And if you get a reason to sell sooner, then perhaps you sell sooner, or you lock in some more profits sooner. But right now, there's no reason, right? There's no setup. There's nothing there. All you have is a location. That's a very strong candle. It's closed. That's a nice close. So the reasonable thing to do is let it run. Okay, but that's going to determine. You have to determine how aggressive or conservative you want to be. If you want to be conservative, you let it run. I mean, you want to be more aggressive, you let it run. If you want to be conservative, you take a little off the table. Maybe you take 10% off the table. Okay, never hurts. All right, let's move along. All right, a few more. Okay, hey, Tillin, how are you? FOMO, again, it's getting hard to stay on the sidelines. Yeah, don't worry, okay? Staying on the sidelines is okay because you don't lose. like I said before, this is a game of taking risks. But if you're going to take a risk in an area that at least gives you some probability, something that's a little more favorable, right? You don't want to be chasing this thing, right? It's a bad idea. Wait for some kind of pullback. Pullbacks always come, okay? No market's going a straight line. Well, this is a straight line. Yeah, but it'll pull back. These things are, this is not a sustainable move. So don't worry. Hey, Dom Indian, how are you? I have a question about your chart choice. Okay, I ask because the other charts don't have all the potential inside bar. Okay, that's a good question. I use the 8-cap one because I have my analysis on there because they were sponsoring me for a little while and I still happen to use it. There's really no particular reason. I noticed the candles aren't exactly the same. So you just have to go by if your chart is showing a particular candle, right? Like here, for example, you have like these dojis, right? You have a bearish pin bar. This is Bitstamp, and this is the spot chart, right? If I go to the 8-cap one, it's the candles are not going to be the same, and that's because of the way they close. So here's the 8-cap chart. As you can see, it's not the same. Okay, so in general, though, you just have to go by what the candle is saying. We had that pin bar on the other chart. Here we have an inside bar. Okay, it's the same effect, kind of. It's a bearish inside bar. If the low is taken out, most likely the low of that pin bar on the other chart will be taken out. It's the same idea. Okay, the key thing really here is the locations. Don't get confused. The best way to avoid the confusion is just stick to the chart. Like if you're using a perp chart, for example, stick to the perp chart. Whatever it says, just stick to the chart. You're better off doing it that way. All right, don't get confused because there is a random element to this, and usually you see that because the exchange is closed, the candles closed, they don't all close at the same time. So there are a variety of candles all over the place, right? That's why you have to be aware of the context and location and not look at the candle in an isolated way. Does that make sense? All right, good question. And thanks for stopping by. Hey, Daniel, how are you? Look at Polestar and Lucid Automotive stocks, PSNY. Okay, I'll look at one. Go forth. Mark the Magnificent. I don't get, people, you should come by more often because I don't get too many compliments, especially these days. So that's nice. Thank you. So here's Polestar Automotive. Now, again, let's look at the weekly chart, right? And what I'm doing here are things that you guys should do. Like it's the habit. You should always start with your weekly chart, get some perspective, then start looking for your levels, right? So on this chart, this is not exactly a strong situation, okay? You have this, look at this lower high resistance area that developed a few weeks back. You have another potential lower high developing now. The previous week's candle, that bearish candle, not exactly favorable. It may have established this lower high here, possibly. Now, this is a weekly, so you have a whole week before this candle develops. This area right here is going to be tough because you don't really have too many points of reference nearby. You have this support here, right? And basically, you're looking at this resistance here. Those are your levels on this thing. So I don't know what you're considering for something like this, but if you're thinking long, it'd probably be a good idea to see if you can get it nearer support. Now, this thing, let's say you say, okay, I'm going to wait, right? I'm going to do the right thing. I'm going to wait. And then a week goes by or two and it's up here. Oh, I missed it. I shouldn't have listened to this guy. I missed the move. Well, it depends on how much risk you want to take, okay? This location is risky because it's in the middle of nowhere. So it's 50-50. You want to take the chance, and if you're wrong, you're going to have to be quick about that because it's this thing can very easily start out like this. You think it's going higher, right? And then it may turn like right here and then test the support. So you have to decide how you want to manage that, right? Just because if we say, oh, look, it's bullish, and then you're going to think, well, okay, that means it's going to go up here. We don't know. There's no way to know. It can turn at any point. At least when you're at a support level, it's more likely to find support because it's found support there before, although it can break, but there's a better chance that it finds support because, again, it's proven it, and then perhaps it respects the bottom of the range, and you have yourself a good price, okay? There's a lot of waiting involved in this stuff, so you have to decide how you want to manage that. All right, good question. Okay, I have been following you since 2017. I'm amazed that you still have not sold out. Iron Resolve. Oh, I appreciate that. Yeah, well, because that's who I am. Okay. I don't change my name like some people. I don't change I don't flip. I see what these guys do, and I can't compete with them, to be honest with you, because no one appreciates. A few people do. I have a few people watching me, but no one really wants to be told the truth. No one wants to hear reality. They would rather be lied to. Okay. Lies are very alluring. Of course, it's not pleasant when you lose all your money, which is what it leads to, but it's the journey of losing your money is what's exciting. Okay. And everyone lies. That's how you make money in this game. That is, you can think of that as sort of an inefficiency that these fake gurus exploit. They lie and they get paid for it. Okay. And even if they don't sell anything, they can get paid on ad revenue, so they can capitalize on your attention. Anyway, thanks for mentioning that. Don't get me started on one of those rants. I could talk about that for hours. You missed my PRTS. Oh, car parts. Okay, I'm sorry. All right, listen. All right, look at the time here. Here's what I got to do. I see a question here from Vanessa. How do you define support and resistance levels? Vanessa, I'm going to answer that question really quick. There are two types. Okay, there's historical, meaning here. Let's go to Bitcoin. Okay, there are historical support and resistance levels that basically are something that were an event proven on the chart. Okay, like for example, there's a support. We can say that there's a support here. These two bottoms touched. Okay, and you have a double bottom. That's a support. It's historical. Same with the resistance. Levels were touched and there was reactions. Right. This was a support back here. It became a resistance. Those are historical. And then you have projected. Okay, which you can use fibs for. You can project fib levels. So those are basically, like, we can call them theoretical or projected or proportional levels, because they're based on some kind of proportion and not necessarily on some kind of particular history. Does that make sense? So I go into a lot of those details in my training. But anyway, all right, so that's a good question. I hope I answered the question adequately. All right, everyone. So listen, if I missed your question, I sincerely apologize. I can only do this for an hour. Listen, if I stream every Monday, I stream on Wednesdays right now. So if I missed your question, come back to one of my streams and please ask me again. I'll be happy to answer. Otherwise, again, I want to thank you all for taking some time with me here today. Hold on, let me just. Okay, cool. Oh yeah, Dominican. Sure, I remember you. I remember changing the permissions for you. I remember your name because your name is easy to remember. So again, thank you for that. I'm new to this game. Just started following you. What do you suggest to an amateur? Okay, Hamid Reza. That's a very good question. Number one, I'm going to give you the best advice I can give you in 30 seconds. Respect the random nature of the market. That is the first and best thing I can tell you. Markets are random. Accept it now. The sooner you do that, the better. It means that markets are not forecastable over the long term. If you can accept that now, you will also realize that 99% of the information that's thrown your way is false. Okay? If you want to research that more, there's a thing called efficient markets hypothesis. Google it. It's not something I made up. It's a theory that came out in the 1960s. There's been a lot of arguments against it, but in recent time, I think the market is more in line with that idea because technology makes things more efficient, okay? And money comes from inefficiency. So if things are more efficient, that means things are more random, okay? That's the best advice I can give you. Other than that, take your time and consider things from the behavioral perspective first, okay? Don't get all wrapped up in charts and complexity. Less is more. All these RSI nonsense or whatever is not going to help you. In the beginning, you first need to get a good grasp of the bigger picture. And that's what I help people try to understand, okay? Perspective and context. Okay, everyone, again, that's it. I got to stop because otherwise I'll be talking here all day. If I missed your question, I apologize. Again, ask me at another time. Enjoy the rest of your day or the rest of your evening, wherever you are in the world. And thank you very much for watching.